All right, good morning, trade pros. Welcome to Morning Market Update. Tuesday, February 24th of 2026. It's George Papazov. I'm here with you. Like you can see what the title says. We're gonna talk about that and a little bit more today. Let me just turn it around, open up the camera for us. I love that it has a little camera thing. And yeah, good morning. Hope you're having a good start to your morning, I suppose. Um, One of our traders, Fatty, was in town yesterday, and he's young. You have to remember, Fatty's a young guy, and relative to me. And he last minute, I don't know if I was going to see him with the way things went. He said, let's meet up today," and I went. I'm like, I'm gonna have a short dinner. We had fascinating discussion and conversation that took me till like 3 in the morning, and you could probably see it in my face. Don't look under my eyes, but look at the haircut. Haircut's looking good. So in today's update, futures are up slightly off of yesterday's lows, and yesterday's lows were really low. Therefore, we're still in a bearish structure. We'll talk about what the whole trading plan is in just a moment. The good news is there's not much news in the market. The key events this morning are ADP weekly employment. We got that 12.7K versus 10.25. So that is a stronger employment report. Um, Stronger employment report is sort of standing in the way of the Fed cutting rates, or at least advertising that they're going to start to cut rates. It's probably driving confusion behind their closed doors with inflation cooling off and employment being stronger. We have Fed speakers Waller, he's a voter, and Dove. Today we have Cook, we have Goolsby, Bostich, Collins, Barkin, but Cook is the one to watch. All right, he's coming up. So just to give you a quick preview of what they said, Fed's Goolby says that is optimistic that there are more rate cuts this year, but not until inflation is heading back to target. So he's essentially saying inflation is the important thing. Yesterday, Waller told us the jobs is an important thing, and you're starting to understand what's going on. But the thing to know about Goolsby, he's a voter in 2027. He's not a voter this year. He's a voter next year. So as much as he's got an opinion, he doesn't have a vote. So he's not going to really influence the outcome of these interest rates and the path forward. Fed's Bostich is currently a voter. He is retiring this year, and he is a hawk. He's not a dove, meaning he doesn't want to see rate cuts. He, in fact, wants to see rates go up and stimulus being withdrawn from the market. He says the U.S. may be trending towards structurally higher unemployment. Transition to AI could be challenging to policymakers. Now, that's a pretty interesting comment, acknowledging AI is, taking jobs and how to read into it and how to adjust their analysis, considering they're a more seasoned group of more people who have lived longer. Don't want to use the nasty three-letter word, OLD. Um, so they're adapting to this the structural change in the labor market. It's an interesting comment. Doesn't really have as much bearing, but I thought I'd just bring it up to you. Commodities this morning, oil's up 0.3%. All right. Crude has been on U.S. Iran escalation. Whenever there's escalation with Iran, considering their participation in the oil industry, there's always going to be fear, and that fear drives prices of oil higher. There's a meeting between Iran and Donald Trump, not directly, but Trump's administration on Thursday. So that's something to watch for. In terms of trade tariffs, like this horse is getting beat down, so I'm not going to get too much into it. But Trump wants to see Trump's 10% global tariff officially takes effect today after the IEEPA was struck down as not legal. And now he's got 150 days. The clock is ticking. We're all trying to find out what is the next step. China's calling on the U.S. to abandon these tariffs. Europe is saying that the new tariff policy breaks existing trade agreements. All right. The news here is the market is probably my read on this as a trader is the markets are probably gonna have to take a little bit of a break from news-driven events because Trump and his administration are going to be really busy in the coming weeks. So I think there'll be shifts back and forth and up to date updates, but I don't expect anything massive to come out until they kind of sort this out. They got their hands full. They're going to have some time to work on it. All right. That's the tariff situation. Crypto Bitcoin is down 4.8%, sliding down to 63,000. You could see it in South Florida. Less people in flip-flops and sandals and a t-shirt coming out of $300,000 cars. Bitcoin is really taking a beating. Honestly, 63,000 is pretty low. I have one of my crypto traders that I talked to over actually at my son's birthday, and he said, Bitcoin, this when it was trading at like 80,000, he's like, watch Bitcoin's gonna go down to 66,000. I'm like, oh, that's it's a pretty big haircut. Um, then he said, well, you need a haircut, and I laughed and I got one. But say the next one down is like 54. He's like, if I get a 54, low 50s, I'm gonna start loading up. I just his take. This is not advice or recommendations. Read the disclaimer. Ethereum's down 5%. Risk off move is still intact here in the crypto space. So that's your update so far. Let's turn around and get on the charts. I got a story to tell you. I got two stories, three stories to tell you, and a trading plan to build up with you. So let's get in there and let's get active. My fellow trade pros that are so attractive. Um, where'd my Zoom panel go? Oh, my Zoom panel is gone. No, Zoom, don't do this to me. Zoom, Zoom. Hang on. I'm not sharing anything, so I'm going to just try and do this. No worky. 1 second, team. I'm still here. You can hear me. It's just the camera's off because you'd be looking at the back of my head. Just trying to figure out the Zoom situation because oh, there it is. Just hidden. When you have these two big monitors, everything just hides everywhere. Okay. I turn off the camera. I could put on the screen share and we can get to work. Let me see some of the comments here on YouTube real quick. Good morning, Prashant, my brother. Hope you're doing well. Marco. Wow, too much snow, huh? Wow, Marco. Snow. I forgot there's snow. Yesterday lost 1K, 6 losses. Today did 3 wins, made it all back plus some. Preddy, that's what I'm talking about. And kudos to you because forget about the money aspect of it. That's not going to impress anyone but yourself, right? And you know that already. And I love how our Trade Pro community is because it's the return is one day, but it's the mindset that you carry and you build forever. And to be down a day and to then come back and string together some wins and be up more than you're out the day prior is a really, really big win for you, sir. And I'm very proud of you because that's a good mind state rebuild. You rebuilt that mindset and put some capital in the account. So it's a double win. Good job. I love to hear that. That just put some pep in my step for this morning because I'm trying to do the same. All right. Let's talk about the trading plan today. Mark, I see you got your hands up. Everything okay? Hang on. It might be from before. I'm just making sure you're good. All right. Okay. Okay. So the plan for today then is this. All right. Maybe I'll keep it like this. I kind of like it like this. Just stick it to the side. You can read ahead if you want. I wouldn't, but you could. All right. So the open yesterday was at 69.09 or 69.08. All right, then we got a straight shot rally up into the what now has become the prior day high, a 69.30 quarter. Okay, as we were trading 69.30 quarter, we were talking about the prior day high of 69.31 half of this red line, saying that it's got to break that and go up a couple points and then rotate to give us a sign of acceptance into a high level for the bull trade to set up. So the bulls were really excited on the open just until we got to the point where the sellers were waiting for them and then they clobbered them. So we couldn't break out. Order flow started to look pretty bearish. We didn't look for the long trade and then bam, we sell off. All right. In here was a great short setup. I didn't take, some traders did. And up here was a great short setup as well. We had two short setups. And I'll talk about the situation with me in a second. Let's just keep it going for now. All right. Then we sold off pretty hard, pretty like really hard, without very many pullbacks. This is the thing about a downtrend. You don't get too many pullbacks. You kind of got to get active. And if you don't get active, you're left on the outside looking in, which is a thing. Then off of that, we set the prior day low, 68.32.75, like I said. Then we come off the lows a little bit, about 20 points or so, 20 handles, and we close it out at 68.52 3/4 for the cash close in the session. We close very close to the lows. We close below this prior support structure. We close in a bearish pattern that has formed. All right. Overall, the range was 97.5 points. Volume was 1.46 million, which is larger move than Friday points wise, lower volume than Friday volume wise. All right. Now we're down into new fresh low for the multi-day cycle. It's not a fresh low because obviously the fresh low for the ES is like zero. But fresh low for the multi-day cycle, we're in a multi-month consolidation. Downside's looking to hold, but we are starting to run into some key supports. And this is what yesterday's US session established and started. We talked yesterday on YouTube about people being overhedged. And I think if we continue to test the downside, we find out if there's more hedging to come out. We're going to find out. Today's a big day of information to see the appetite that's going to take us for the next 200-point ride. All right. The story overnight is relatively simple. Buyers took us higher. We set 68.75 as the overnight high, which was interesting because we had quite a bit of sell delta here into yesterday's session, and the level that almost made me throw up. I'll talk to you about it in a second. But we stayed below the prior swing low. So if you can see here, this is actually consolidation low. It's not a swing low because we were consolidating. We broke, and then we go and retested it, and we are accepting lower prices. We're in the process of accepting lower prices. In today's live taught lessons in the futures course, just a reminder, anyone on YouTube, we are live teaching the order flow and trading course right now at this very moment. And we were getting live lessons. And we're doing 2 to 3 lessons a week, and then we're practicing and applying it. And then the following week, we do more. So it's kind of like a coaching program. And it's not more than the membership. It's all included in the one low price of the membership. So great time to check it out. If you're interested, you get to catch some stuff live. But today live, we're going to talk about acceptance, rejection, market structure, bullish and bearish trends. So we got a lot to cover. This is a prime example of it. So we're seeing some acceptance towards the lows in the overnight drive. Overnight volumes are pretty low at the moment. They're at 174,000. You know, at this point, you kind of want to be somewhere around the 200 range to be mid. Anything above is pretty high. I remember when it used to be 300 middle ground and average. But you know, trading volumes are dropping off. Whenever we're going to prop firms, no actual trades are hitting the market. Everyone's trading on a book of fictitious trades, but it's okay. Whatever works, right? We're gonna have to adapt. Yesterday's notes is this. I had a plan, and I have a plan. Oh, I forgot to tell you, the flip zone today is 88 to 92, this yellow line. I don't know how I missed it. Anything below here, short opportunities, anything above here, you start to get through the middle of the range, you start get some bullish excitement. We could try longs, but ultimately, like the structural flip is 69.25, the big one. For today's flip zone, 68, 88 to 92 is good. 6,900 is your big gamma level, and so keep that in mind. All right, so yesterday, guys, I made the mistake to add a buy trade at a 68.80 on my flip zone. My flip zone was 24 yesterday, and those of you that know me and how I'm trading, it's the fact that if we're below the flip zone, I do not buy. Goodbye to the buy side. I just wait to get short. If we're flip zone is higher and the trend is down and there's a clearly defined trend like there is at the moment, what is the point of buying weakness when you're going to just get your throat stepped on by the institutions the moment we go up 3 to 4 points like yesterday's price action? There is no point. What was the point of putting a buy trade there yesterday? I'll tell you what the point was. The thinking was 68.80 is the range low. All right, that was a mistake because it was actually around the mid 60s. So the level could have been cleaned up and it may have worked. I'm not kicking myself or justifying excuses and whatnot, but I missed one short at the top yesterday. All right at the failure here, at the rejection. I missed the second one here, and this one here was so juicy. It hit our sell imbalance. Literally everything you want to see and more happened. And I was yapping on the mic. I got carried away a little bit, lost focus. I'm not going to lie. And then by the time I saw the price get there, I go to the ladder and it was too little too late. It had already gone without me. When the market is moving short, you have less time to think, less time to analyze, less time to act. You really have to be dialed in. And fear is 3 times bigger than greed. So when we go down, we go down. And when we retrace, the fear is still lingering and people start to hit the sell side quicker than if you are on an upswing and you're like, oh yeah, it's a nice cute pullback. Yep, nice extension. We're gonna get another pullback and it pulls back over, retest the high. It don't work like that on downside. Downside's different. That's why a lot of traders struggle with it. I wasn't one of the traders to struggle with it until yesterday. I'm being honest with you. What cost me 3K is putting that level on the trading plan and then deciding to not just trade it, but defend it like a bonehead and being long into this little structure and not taking any of the short. Wait, my bad. It's actually here. Not taking any of the short trades I had. Lost focus here. All right. Missed the first one by design. It didn't really set up that great. The second one just lost focus. Didn't get on board. And by the third one, I can't help but feel like I traded the third one only because I didn't trade the first two. The problem is that I allowed myself to have the third one to be counter trend in a trading plan. And the reason I made that exception is the range trading setup. As we head into summer, we're going to talk more about how to transition to a range trade because the range trading setup is a good setup. All right, you can't just have a flip zone and say I'm going to stay short below it, and then it's a range of 20 points, and you wait all morning for 20 points to get up there, and you do nothing. You have to get a little more active because price movement contracts and volumes drop off, especially through May, June, July. August starts to pick up again. So, look, I paid money to learn a lesson I didn't need to learn, but hey, it's a reminder. Some days we get loose, the market just slaps the discipline back into us or slaps the need to work on ourselves, and then we discover discipline and patience. Very rarely has anything else been the solution to any problems. All right. And yesterday, because I took time to kind of analyze it and decide, look, in a trending market, in a seasonal period where we're getting movements, there's no need to be doing counter trend trades because if you could short and you could buy at any given moment, what can't you do? How could you practice discipline if you could do anything at all times? That's the problem with it. It's not that I don't want to get myself a nice little trade off the low and get long and be so happy. And yeah, it strokes the ego because you caught the reversal and it's paying you more ego capital than it is real capital. Yesterday, it was a mistake. I paid for the education. To me, it's not a loss because I learned something out of it. And I'm not letting those trades sneak into the plan. And I find it so funny that one day I make the exception to throw it on and bam, that's that's the day the market just not today, sir. This trading stuff is great. Anywho, that's a wrap. All right, let's do a trading plan today. We're in a multi-day downtrend, all right, and a multi-month range. So what that means is that we're in a pretty well-established downtrend at the moment. Sellers should try to defend this. This is like the next natural checkbox off the list of things to accomplish. All right, 68.80 has some buy stops that are starting to clump around here. 68.80 also has some emotion from traders like myself who got a little diced up around it, but it was an important level because that was the chance for the buyers to hold, and they actually did look like they were going to hold. The thing that really kind of threw me off about yesterday is I had four trades at that level. The first two worked partially. I had a split fill. I had a long, it goes up, I got paid, stopped on the balance. Long goes up, get paid, stopped on the balance. And then the last two, buying it as it dropped and just going on tilt and losing all focus was the nail in the coffin. It's never a big problem. You will never see it say, well, that's the problem. It's always start small and compounds. And then once it starts small and you start to lose grip of what's going on, the compounding, the bigger is almost inevitable. It's kind of a lizard brain thinking, and the lizard brain does what it's going to do. It's going to cost you money. So yeah, today's plan is to stay on the short side. The 92 is the flip zone. Anything below there, you'll see some pressure. Looking for a rally early in the morning to set up a bull trap, get some people excited, get them long, and then to set up and present an opportunity for big sell liquidity to come out. Okay. Short areas are 65, 75, and 90. So 65, I mean, this one already worked. I set that up before this tick pre-market. Let's see how that area looks a little bit. I'd probably now push it to 75. You don't want to be selling that close to going to the open, especially after it already worked pre-market. So 75 has got some nice delta here. I like it. Next one up is 88 to 92. That's more price structure. And those are the two levels. Anything above there, you should at least get the 04 and then the 24 to kind of reset. And then we chalk this out to a false breakout of a range. Back up we go. All right. So yeah, we're kind of waking up, finding out, is today going to be an acceptance or rejection of the low? And if it's an acceptance, look out because we're going out lower. If it's a rejection, up we go and move into the range again. That's the short areas. Main support to the downside is 68.20. 6,800 and 67.60. These are kind of like ultimate targets as well. Rallies above 6,892. Open up upside strength. And the game plan today is be patient. Let the trade come to me. I'm not forcing it today. I don't need to. After a day where you kind of break structure and discipline and you're not really a good form, not excellent form, but you're not even at good form, what you need more than profit and making back your loss is good form, good execution, good psychology. Don't take a 1 day problem and anchor it to a multi-day problem, turn to a weekly problem, monthly problem, turn into a real trading problem now. It's the last thing you want to do. That's okay. You had 1 day, shake it off. And the pressure here isn't to make everything back from yesterday. The pressure here is to stick the landing. All right. You know what I'm saying by that? Like as a pilot, land the plane. Focus on safety, focus on making the smart things, focus on your checklist, focus on the workflow. The rest will come to you. That's how you want to re-anchor. Gamma today, Gamma flip zone 6,900. Net GX is net Gamma exposure is minus 100 million. That means dealers are set up to chase moves. Gamma levels, there's a big one right here, 68.55. I expect some chop around it, but as we move lower, we should open up the rest of the day. All right, we're gonna look at MBO and some other stuff with the team. YouTube, thank you. I love you. I hope you've had a great morning market update with me and learned a lot. And yeah, let's go. Shake off the day for me and let's mentally focus on the setups in front of us. Take a look at our community, join us today, and you can be part of the live taping of the next 3 lessons in the course and the remainder of the lessons in the course coming up. Great time to, oh my gosh, somebody's cutting the lawn. They're right by my window. Could you hear it? Wonder how good the noise suppression works. I love you guys. Have a great day, and I'm gonna see you tomorrow and inside the community. Check it out. It'll be a great investment for you. And we got 14-day money back guarantee. So at the end of the day, I think this is the only time in the market things are gonna be risk free. Love you. Goodbye. Catch you tomorrow. And since I said the dirty word of risk free, I wonder who's gonna anticipate this one. You know what's coming next, right? Oh my gosh. Guys, I'm low on sleep. I love you all. I'm gonna see you tomorrow. And I gotta get it in early today. Probably trade till 10:30 or so and be done. Mental capital is gonna be low, but we'll fight through. Love you. Goodbye.